Glad to have you back. Now, President Bola Tinubu has called on the World Bank to support the ongoing economic reforms with a focus on agriculture, youth employment, and private sector growth. It's part of his administration's strategy to strengthen the economy and expand opportunities for Nigerians. President stated this while receiving the delegation from the World Bank led by its Managing Director of Operations, Anna Jed, at the State House in Abuja. The president highlighted the importance of mechanization and modernization of agriculture to increase productivity and create opportunities for Nigerians' large young population.
Well, since we've gone into this tunnel of reform, we have our hands on the plow and we're never going to look back. It is very clear that initially it was painful, difficult, but those who win are not those who give up. Now that our petrochemical industry is getting, good output, so how do we help the farmers to convert local market for fertilizers to improve their yields and move them from ordinary small-scale holders to huge cooperative and confident farmers that can bring, opportunity to Nigerians.
Well, let's bring in President of the Capital Markets Academics of Nigeria, Professor Uche Uwaleke, who joins me again from our Abuja studios. Prof, good afternoon, and thank you for your time. I think I would let you react to the comments about the World Bank Managing Director Operations regards to the reforms, where we are and where we would be if we stay the course.
Yeah, thank you so much, Tolu. I think it's cheering to note that that's coming from one of the major international financial institutions we have in the world, from the World Bank Managing Director of Operations, one Mrs. Anna. I think it's, for me, it represents an external validation, and particularly when it is framed around the fact that Nigeria is now becoming a reference point, is something that no doubt will be positive for the country, especially in terms of attracting more investments in Nigeria. So I think it was a good thing that it is coming from, as I said, the international financial institution. So for me, it's an external validation that a number of things are beginning to shape up, particularly at the macro level. Is now obvious to everyone that we are beginning to see some macro economic stability, in the economy. Talking about the moderation in inflation rate, for example, throughout last year, we saw what happened with disinflation more or less setting in. Inflation moderating to 15% in December after the National Bureau of Statistics, cleaned up the series. We still saw that the disinflation trend, and then of course the improvements we have seen in the forex market, the stability that we have there now, to the point where we are beginning to see the naira now, strengthening. Of course, on the back of accretion to reserves, the fact that today we have external reserves in excess of $46 billion, enough to bring in 10 months of imports. If you compare that with the situation pre-2025, yes, or even 2024, you would agree with me that a number of we have made improvements in that area. So again, one can also point to the current account surpluses that have been recorded in the past. It used to be deficit. So when you look at the macro picture, there is every reason to believe that the economy is beginning to stabilize, and that's what the internationals are seeing, and that's also why you find that reflected in the ratings. Ratings by the international rating agencies, particularly Fitch and the Moody. They have given very favorable ratings on Nigeria. The international banks themselves are not left out. The likes of Goldman Sachs, they have also put out some favorable reports on Nigeria. So I think all of these two are what are supporting the inflows we are also seeing. Last year we saw foreign portfolio investments surge by as much as 800 billion, if I'm not mistaken. So they are a testament to the fact that yes, the reforms are beginning to yield results, in my view.
Thanks so much, Prof. And I like that we all agree that the macro, we are getting that right, but the micro is where the concern is now, the man on the street and everyone. And even at that meeting, the reforms agenda now beyond policy changes and how it will improve daily lives of Nigerians. Prof, what next?
Absolutely.
To consolidate
Absolutely.
on the
What
positives?
next?
What next?
Yes, what next? That's a very good question. What next? You can also add to what I've just said, the tax reforms and the expected positives that will also be coming from there. But you have asked a very good question. And that question is what next? Yes, we've seen the macro picture, improving. But what is, of course, more important is what happens, down the line. The ordinary Nigerian should also feel it. So when you hear that GDP is growing, the ordinary Nigerian should feel it. So what next is for us to now go beyond the mere numbers, go beyond the fact that GDP is growing. GDP, as you know, accelerated to 3.98%, third quarter of 2025, and it's been projected to, the FG is projecting 4.6% GDP growth rate for this year. The IMF has also revised its growth projection for Nigeria from 3.7% to 4.4% in 2026. So everything points to, upward trend. But again, you have asked the right question. Okay, it's not just about GDP growth, but more about, if you like, economic development. So for now, what should be next should be how do we achieve broad-based growth? How do we achieve inclusive economic growth? Okay, the one that permeates, down the line, which is also why I'm happy that the World Bank lady that came was now talking about a new framework, a country partnership framework that is now going to emphasize job creation, that's now going to emphasize agriculture, that's now going to emphasize, SME growth. Yeah. So for me, these are what, should now, occupy the attention of, those, authorities at this point. So it's about how to make the growth inclusive, how to make the ordinary man in the street, feel it. And for me, that can also happen by the time we begin to change the quality of spending. Okay, now the focus would appear to be on revenues. Okay, how to grow revenues, reduce borrowing. But one important aspect of this, because the growing revenues is one leg of it, the other leg for the economy to stand properly is also how to apply the revenues, how to spend wisely, particularly in social services, that will now enable the common man, feel it. So I want to see the government, spend more money on education, for example, and the right type of, spending, not just recurrent, ensuring that skilled education is emphasized. I also want to see the government spend more money on health, okay, and then living standards. So that's talking about human capital development. We shouldn't in this country today be talking about the lack of drugs in our hospitals. Okay, people shouldn't be dying because of ordinary absence of anti-snake, venom, in our hospitals today. So drugs should be made available in our hospitals. So any revenues that we get must be prioritized, to, I have said, health, education, okay, such that you also have another example I can also give is to ensure that the health insurance scheme is also expanded so that a lot more people can also benefit from the health insurance scheme. Okay, for education, the government should also be focusing on deliverables, such as reducing the number of out-of-school children, that would appear to be on the rise. Yeah. So now that we are beginning to see some stability in the macro space, okay, what should now concern us, should be the things that matter. Okay, so we should take them one after the KPIs that have to do with human capital, development in general. Yeah. When we talk about multidimensional poverty, for example, what are those things that count? How do we begin to even release our statistics in relation to those numbers? For example, instead of saying unemployment has dropped from 5% to 4%, we talk in terms of numbers, the real jobs that we are created over the period. The real number of children were able to out of school children were able to reduce. The dropout rates were able to reduce. These are the kind of numbers which we should be churning out now, okay, for this international community and also Nigerians to be the ones to now, trumpet these achievements. So for me, it's beyond the numbers. It's beyond the macro numbers that we are having. But of course, I also want to recognize that these numbers are also good. They are good for the country. They are good for the economy. We often say in economics that GDP growth is only a necessary condition, but not a sufficient condition to have economic development. So for us to have economic development, we should go beyond just the number, just GDP growth, and see how we can make it a lot more, inclusive. And that's also why I want to advise that, yes, the World Bank may not like it, but like this suggestion, because they've always been in the forefront of conditional cash transfer. Yeah. I want a situation where the government will discontinue the conditional cash transfer and then explore other means of channeling those funds to ensure that the real people actually get assisted, the vulnerable actually get assisted. And the World Bank lady talked about it, the SMEs. That's very crucial. Yeah. And that's also why I'm happy that even the tax reforms now, tend to also help. Will also help to formalize a lot of businesses who have in the informal sector. Okay, that is why you also hear, for example, that part of what the tax reform is advocating is that even when you are not going to pay tax, even when you are going to be exempted, you'll be required to file returns, you'll be required to register, do some registration of some sort, have a tax identification number. The whole idea behind that is to enable government to have data, data with which to work with, data with which to assist, those that really need the funds. So even in the informal sector, where presumptive taxes, will be applying, there is, I understand, an arrangement to also exempt businesses with turnover of less than 12 million naira per annum. These businesses are known as nano businesses, to exempt them completely from paying taxes. But of course, government needs their data, for government to be able to assist them. And on this call, I would like, Nigerians to see the idea behind getting a tax identification number, not for the tax purposes, purely, but also to be able to enjoy some social benefits, so that government can have the data to be able to, deliver some of this, these benefits, to Nigerians. So it should be seen more as a social benefit number. Imagine if we had such data during the COVID-19 crisis. Yeah. The interventions we made, blindly at that time, giving money to people that, didn't really need the money, wouldn't have happened. Today, as we speak, I'm sure if you check how much that has come in, by way of those soft loans we gave out, not much may have come in, because a lot of the money went into wrong hands, wrong hands. But if we had the data, for example, of those that really needed the money, those that they were really doing small businesses, for example, I'm sure the story would have been different. And that is one of the things that this tax reforms will do. It will help, in my view, to ensure that the data is available. So even if you're earning 800,000 naira, below, your taxable income is 800,000 below, and you're not paying tax, that your data will still be required, for government to see how, in case, assistance will be needed. And for those in the informal sector, the same thing, applies.
Thank you.
In summary, Tolu, for me, what matters now is ensuring that the macro numbers, also reflect much more down the line. To the ordinary Nigerian.
Thank you, Prof. I will appreciate you for even helping us educate Nigerians again around the tax reforms. That's a continuous process, and we'll continue to do that to make Nigerians understand what it really means and all. In 1 minute, MPC meeting would be in about 2 weeks. Prof, we always talk about this even before that meeting. With inflation standing at 15.15%, GDP growth at the end of the year was pretty good, and also stability in the foreign exchange market, which you talked about. What do you think would happen? We have just 1 minute, 30 seconds for this.
Yes, what I would advise, which I also think should happen, is that the central bank's MPC should also begin to think of how to reduce now the monetary policy rate. Monetary policy rate of 27% is on the high side. That's why you also find lending rates are very high. Today, I just read somewhere, one of the papers saying part of why cost of doing business is also high is also because of, the high cost of credit. So now that inflation is moderated, now that the risks to inflation, have more or less been curtailed, we are having stable exchange rates. Naira is now firming up even below 1,400 naira to the dollar. I want to advise that this is the time to begin to see how we can, change stance to accommodative monetary policy, particularly so that even in the U.S., for example, there is every likelihood that the U.S. Federal Reserve will also, change stance with the new
chair of the Reserve Bank.
Trump has now. Trump has recommended Kevin Walsh to replace Jerome Powell. Jerome Powell, and Kevin Walsh is somebody the market is expecting to come and cut rates. So MPC should reduce MPR. Indeed.
I think we'll talk about that some other time.
Next meeting, yes.
Yeah, Trump finally had his way there. Powell is out and Walsh is in. But I must thank you, as always, Professor Uche Uwaleke. Interesting conversation with you, President, Capital Markets Academics of Nigeria. Do enjoy the rest of your day, Prof. Thank you.
My pleasure. Thank you.